So today we'll be going over the process used for creating budgets. One of the areas that I came up with was calculating the expenses. So an organization's expenses that they incur either quarterly, semi-annually, or throughout the year, and being able to forecast that. So calculating the expenses, your first order of business is to find out exactly how much you're spending each month. How much is the organization inflowing and outflowing for their income and expenses. Do this by consulting with the bank that you use for the company. They will be in charge of keeping your receipts, the financial files, and etc. Generally, an organization has an in-house accountant. One of the things that you will have to plan for is to add up everything that you've been spending for the last 6 to 12 months, and then divide that amount by the months, which will give you an average of your monthly expenses. Some months are going to be a little bit higher, some months are going to be a little bit lower depending on what kind of sales you have. Also remember that when you're going through and you add up the expenses, it's really important to create a realistic budget. If you don't have a realistic budget, you're setting yourself up to fail. Some things you might forget about is a bill. Hopefully that's the kind of stuff that you're able to keep up with, and you have a good accountant that doesn't let that kind of stuff slip through the cracks. Next is going to be determining your income. You can do this quarterly, you can do this semi-annually, and obviously you can do it annually. Once you've figured out how much money you need to stay afloat financially, it's time to determine your actual income. Next is going to be set the savings and debt payoff goals. So here you want to have some sort of emergency fund essentially for your company in case you have flat months, which hopefully you won't, but it is reality. And some months, some businesses go, a few months or a month, or not too many, where they do not actually have profitable months. And also another thing to consider is the debt payoff. Any business that starts up generally has a certain amount of debt they need to pay off. In order to determine your realistic savings and debt payoff goals, you must find out what that actual number is by subtracting your monthly expenses from your income, and then also your debt to income ratio. If you determine you're making more money than you're spending, well, congratulations, but the amount can be earmarked for savings and to pay off debt. Next, you're going to want to record all spending and all income and track the progress. The best way to do that is to put it into an Excel spreadsheet, and then if you do actually have an in-house CPA or accountant, they can do that for you. But if you don't, get an expense sheet and just add it in daily, weekly, monthly. It's easier to do it daily because then you don't forget about it and then have yourself overwhelmed at the end of the month trying to put everything in there and looking for all these receipts and everything. So just be prepared and track your progress. And then also be realistic. Aim for sticking with your budget most of the time, and you're going to be bound to reach your financial goals if you do so. Breaking your budget is okay, but generally trying to stay on track with that is what is going to get you back on track and keep you as profitable as possible.